Hello, good evening, folks. Tim Davis here, coming to you guys with another weekly market review here this time. And we're going to start out this weekend with a look at the S&P 500. And I want to point out a couple of things before I show you guys what the monthly chart looks like to reconfirm that we are still in a bear market, even within the midst of this bear market rally. And that's exactly what I still believe this is a bear market rally, and it looks like it could continue for a little bit more, and I'm going to show you why. So looking at this daily chart of the S&P, a couple things stand out to me here. There's a couple gaps. Anytime there's a gap, you see gaps in the market, there's a lot of times that those gaps will fill. So 9 times out of 10 gaps fill. Doesn't necessarily mean they all fill, but 9 times out of 10 gaps fill. So I'm going to point out a couple here. The S&P, there was one here on the way down back in the early part of June, and there was one here. A slight one here, but not much of one. And then even on the way up, you have gaps. It's a gap there on the way back up. There's a gap here. So 9 times out of 10, those gaps will try to find a way and fill. Okay, so the gaps on the downside, normally you'll see price action run back up to fill those gaps, and then on the downside, you'll see price action come back down and try to fill that gap. So with that said, let's take a look and see where we stand now. So here's a gap here, which was filled when this price action ran back up. So when price action dropped here, ran back up, we pretty much filled this gap. So that gap has been filled. So now what happens is this level here becomes a level of resistance. We went up, filled the gap, hit that level resistance, came right back down, only to come down halfway and come right back up. Another try and test that level and come right back down. And now we're headed back up with the gap. And I think we're going to test this level here sometime next week. And if for some reason we break through that level, the next level we could possibly see is price action make an attempt to fill this gap here. So that's something I'm watching to see what happens. But for right now, this level here will act as the first level of resistance. So price action can come up and possibly test this level. And if we do not find a way to break to fill this gap, then more than likely we will start to trend lower. And then, like I said before, we got a gap here and a gap here. So if we pivot, if we run up to this level and we pivot, you can see price action start to really accelerate to the downside. So got to see what happens on next week by paying attention to the volume as we go through the beginning of the week and these price levels. And let's see here. So this level here, and the reason why I have this trend line drawn here is because at this point right here is pretty much a pivot point when price action decided to reverse. See that wick there, and this long short body candle. That's a pivot point when price action reverse, and then try to reverse again and try to test that level, but pull back. So this level becomes a level of resistance. So more than likely, we'll probably get price to try to come up and test that level of resistance. And that level of resistance should bring price action to S&P right around 39.58 on S&P. Yep, right around 39.50. Let's say 39.50. So 39.50 is where we could see price action on the S&P run up to beginning of next week sometime. And then we have to see what happens once we get there. if price action finds a way to punch through that, then we can run up and possibly test this gap up here. But let's see what happens as we get to the beginning of the next week. Let's see what happens when a price action get up to possibly test this 39.50 level. Look at the full stochastics, it shows you two price action is trying to hinge up to go higher. Wins percentage also hinging up to go higher. RSI is doing the same. So in the near term, we could see a little bit more rise out of this overall bear market rally. That's what the daily chart looks like on the S&P. And here is a daily chart of the Dow Jones. Dow Jones, same type of scenario. And same thing we'll see here is there's a gap here. There's a gap here. This gap right here has already been filled with this price action here. So now that already becomes a level of resistance. So this point right here is going to become a level of resistance. Which is a pivot point. Because that's when price action pivoted and went lower again. So that could bring us right to around 31,898, about 31,898. So we could see, you know, another couple hundred points out of the Dow, possibly. Again, we have to see how the week starts out, but we could see another rise out of the Dow up to that level. And then that level will become a level of resistance. And then if we punch through that, here's another gap that could possibly be tested for a fill. Okay, that is the Dow. So let's look at the Dow. Let's take a look at the Nasdaq. Nasdaq Composite. Same scenario. It's trading within this downward trending channel. That's the long-term downward trending channel. The Nasdaq, you see that clearly. But there's a gap here. And for that gap to be filled, it would need to travel right back up to this level here. Around 11,700. So if we can get up to 11,700, that will fill this gap. And then we have to see what happens once we get to the level, if we make it there, get in the next week. That is the Nasdaq Composite. Let's take a look at the Russell. Same scenario. The W wins percentage is hinging up. RSI hinging up. Stochastic is attempting to hinge up. And we have a gap here and a gap here. So first level of resistance is right here at this pivot point here. It's around 1795, around 1795 for the Russell, which is the first level of resistance. And then if we can fill that gap, there's another one up here. That's around 1850. So again, there's still more room to the upside that we could see within the overall markets, within this bear market rally. So I wanted to point that out there, show you guys what's happening within the overall market. And now we'll take a look at the VIX. The VIX also is can be a leading indicator. Now the VIX actually made an attempt to rise higher, but then it gapped down. I mean, not gapped down, but traded right down. There's a solid Also a solid red candle. So that leads me to believe that we could see more downward pressure in the VIX on next week. Again, don't think we're going to see a lot. I mean, heavy downward pressure or significant move. In other words, we're not going to see anything drop back down below 20. I don't believe. Because I think overall longer term movement for the VIX is higher. So with that said, here's a trend line here that could be broken on next week that will push the VIX back down below 24. And then we have to look at this area here, which is going to be a congestion area because you look to the left here. There was a lot of trading up and down back in April within that area. So we could see the VIX break this level of support, head down to about 22, or 22.15, which is where it will start to see some type of it will try to find support somewhere around there. Because the same thing we had a lot of up and down movement within this range before. So we could get into this area, have the same type of movement up and down until the VIX finally decides to reverse and go back high, which I think it will eventually. So again, we could see the VIX pull down just a little bit further over the start of next week, and possibly break this level of support. If we don't break the level of support, then we'll just see VIX reverse sharply and head back up, and head back up towards the top of that trend line. Right, look at the full stochastics, it's pointing lower, just a tad, and the wins percentage is in oversold territory. So I don't see the VIX, having a sustainable move lower. I can see it punching lower and then finding a way to start to rally back up to the upside. So that's looking at VIX. And let's take a look now at this is glance at crude. Crude is I think crude is in this downward trending channel all of a sudden, and I'm not sure. We could see crude prices rise a little bit more, WTI crude, but we're stuck in this downward trending channel, so we got to see how this plays out next week. The top of this channel, it would take crude back up to about 102, somewhere around there, WTI crude, and then we have to see what happens. It could rally up to around that $100 level, a little bit above it, and then come right back down. We have to see how that pans out over the next week or so with crude. Now, so if we look at a monthly chart on the Dow, I want to point this out. And this is what I'm seeing in the Dow, the monthly chart. Oh, and not just in the Dow, but with all of them. The reason why we're starting to probably see such a strong bounce, or not even a strong bounce, but major moving averages are trying their best to stay around the levels that they're at now. It's because we're right back at the pandemic highs. So if I was to draw a trend line from here, which is where price action rose up to back in 2020 before it reversed on the Dow, that gets us right back to where we are now. And anytime you run back into a major support level, so this used to be resistance, it was broken here, so now previous resistance becomes support, and we're back at that level now. And this is on the monthly charts. Anytime we see a major support level get tested, we're going to have some volatility and a strong attempt to bounce from that level. So that's what we're experiencing now. The markets do not want to fall below that level because they know if it does, it could be heading towards the pandemic lows. So we see that with the Dow Jones on the monthly chart. Look at a monthly chart of the S&P, the same scenario. You'll see here is, let me get rid of this one. Here is the pandemic high, and we are hovering right above it, not too far from it. So price action is definitely battling not to head down to that level. Look at a monthly chart at Nasdaq. There you go, same scenario. And you can even see, if you look at the RSI, well, RSI in the monthly chart of the Nasdaq is trying to hinge up. So, and we're reaching some oversold territories on the full stochastic. So price action is definitely trying its best to get away from this level of support. Because if we break through the level of support, we can see an acceleration like no other to the downside. This is on the monthly chart, folks. We are heading back to test that resistance level, which was resistance prior to the pullback during the 2020 COVID plunge. And that level was broken on the rally back up. And now previous resistance becomes support. So it looks like price action wants to test that level. And if we break through it, all bets are off. Russell, you see the same thing. Back to that level of support. So previous resistance becomes support. So we are testing that level now. So the Russell will probably be the first one to go and break below this level. So we got to see how that pans out over the next 2 weeks or so. I think over the next 2 weeks, we'll probably be looking for that level to be broken. All right. All right, folks, that's what I have for you guys this weekend. Remember that we are still, as you can see here, this is a monthly chart. We are still in a bear market, folks. So don't let these bear market rallies get you, overzealous and overhyped that we are starting a new bull market. Don't think that is the case. Within a bull market, within a bear market, you're going to have these strong rallies. Okay. And here is look at the daily chart. My moving averages on here. See price action, and this is a daily chart of the Russell. Look, this blue line is my 50-day moving average. Still below that, and we're still below, well below the 200-day moving average. So we're definitely still in a bear market. We're just experiencing this bear market rally at this time. And again, we didn't experience so much downside over the past couple of months. And that's why you're starting to see some of these stocks having these huge bounces. You know what I'm saying? These huge bounces can be very, very good for traders who know how to trade within this bear market. But for the long-term buy and hold investor, it could just end up being a bear trap if you do not know how to protect your gains. All right, folks, this is all I have for you guys, and hopefully it's something you guys can use. I will catch you guys in the next video. Enjoy the rest of your weekend, and I'll catch you guys next week.